Hello traders, welcome back to my channel. Hope you're doing great. So today I'm going to be discussing about the 7 mistakes you're probably making right now in your trading. So I've done a video about this before, but this is kind of like an upgraded version. I'm going to be sharing more deep insights and more tips to enable you become a profitable trader in 2025. So this is going to be a long run. Do all to keep your notepads, get ready with me, and let's go through this journey. If it's the first time, do to hit the subscribe button and join the channel. So, developing the success habit, 7 mistakes you're probably making right now in your trading. So we know, okay, all for educational purpose. So we know trading it's simple, all right? Trading is simple but not easy. You see the dream, you see the lifestyle on social media. They tell you you can make money online, you can get financial freedom trading the financial market. Yeah, that's true, but it's simple but not easy to accomplish. All right, there are rules, there are habits, there are things that you're going to do to improve yourself, to improve your knowledge, for you to be able to become a profitable trader, or for you to be able to trade the financial market profitably. All right, so I'm going to be showing you 7 mistakes to avoid, and I'm sure some of you are already doing them. You're already guilty of them, but by the end of this video, you're going to learn, okay, this is what it has been affecting my trading. I'm going to share you secrets on how to, solutions rather, on how to solve this problem that could enable you become a better trader in 2025. So the first one is not having a trading plan. Now, you can approach the market without having a plan. It's just like you trying to build uh, a foundation or trying to build a home without a foundation. Right? You have to have a plan on how do you want to approach the market. Like I said here, plan your trade, trade your plan. Know the number of trades you want to take per day, have your weekly targets, and have your monthly targets. So for traders that don't have trading plan, they just take trades anyhow, open their phone, take a trade, open their laptop, take a trade. You're not tracking your progress, you're not tracking how you're approaching the market. That is not going to help you get good results in this business. Know your risk appetite. For some of us, we are willing to risk 1% per trade. For some persons, they're willing to risk 2% per trade, 3%, 5%, some persons 10%. But you have to know what you're willing to risk on every trade. That's part of your trading plan. For some, I could give a trade signal, and or my friend could give me a trade signal and he wants to risk 5% of his account on that trade. For me, I might decide to risk 2%. All right. So it's just difference in what we're willing to lose on a particular trade, sorry, and we're going to be comfortable. Now, managing losses and drawdown, you have to understand, or you have to have in your trading plan, how many percentage of loss am I going to get in a week or in a day for me to stop trading? Now, this right here is the key. This right here is the holy grail. For some of you, you keep on trading, you keep on losing, you don't want to stop, you just try chasing your losses and you end up blowing your account. That is not the right way to follow. For me, I have the number of trades I could lose and I will end the trading for the day or for the week. For someone like me now, if I should lose in Forex, if I should lose 3 trades in a week, if I get 3 losses in a week, I'm done trading. If I get that 3 losses in a day, I'm done trading for the week. If I get that 3 losses in a week, or if I get the losses, let's say I get 1 loss on Monday, 1 loss on Tuesday, 1 loss on Wednesday, I'm done trading for that week. I'm going to stop, re-strategize during the weekend, and then come back the next week. That's how I trade, and that's if I could show you my trading history, you never see 3 straight losses. Yeah, I could have a loss, I could lose the trade, but you hardly see 3 consecutive losses on my trading history. So these are just discipline habits that I've been able to inculcate in my trading career that has helped me to protect capital and protect my profit. So you need to apply this thing in your own trading. So if on binary option, if I get 3 losses in a day, I'm done trading. Now, why am I doing this? Because I'm not blind, all right? I've been trading for more than four to 5 years now. So for me to have seen the signal, observe the market, and take a trade. I'm not blind. Before I make any decision in this market, there's something I've seen. Okay, there's something I've seen in the chart. I don't just chase price. I allow the market come to my areas before I execute any trade. So why would I see something one time I lost? I see another signal the second time I lost. I see the third. Come on now. All right. These are the things I tell myself. I can't see a buying market and I start selling. Or I can't see a selling market and I start buying like that. So I must see a signal. There should be a reason for me to take a trade. And if I see the reason, most times I even have confirmations. I take one confirmation, take with another confirmation, and I lose three. No, 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 no. Something is wrong. It's either with me or with the market. I don't know, but we're going to find out. All right. So that's what I do. So you have to tell yourself how many losses are you willing to take a day or in a week for you to stop trading or for you to protect your account. These are part of your trading plan. And then the next one is learn to take profits. Pay the trader. For some of us, during our early careers in trading, there are times that we've doubled our account at a point around 2022 or 2021. I had one account like that. I was trading it, $1,000 account. I grew into like $2,500 and I didn't take profit. Can I shock you? I end up losing all the profits. I still regret it today. Why didn't I withdraw money? Because back then I was not really in need of money. I just wanted to grow the account to like maybe 5K. But even if you want to grow your account, if you make profits, maybe 100%, take 30 or 40 or 50% off and continue again. There is power and there is a psychological relaxation when you take profits. All right, pay the trader. Don't just trade and trade and trade without taking profit. Sometimes the market could just take that your profits. So learn to pay the trader. It's very, very important. And not trading is still trading. If you don't see any signal, don't force trade. If you don't have any clear setups in the market, you don't need to force out trade. Not trading is still trading. It's still a position. Okay. Don't be pressured by social media. I know a lot of things are happening in today's world on social media. You're seeing people doing flipping, doing crazy things online. Please respect your own journey. Don't be pressured by those on social media. A trader looks for consistency while a gambler looks for quick profit. Look out for consistency in your trading while using your trading plan. Don't just jump on a signal or take extreme risks. Yeah, there are times to maximize some trades, but everything should be within your trading plan. All right, everything should be within your trading plan. So if you don't have a trading plan, you end up feeding the market. This is the Forex market, and these are the retail traders. Look at your $50 account, your $100 account. You're just giving it to the market. Stop adding money to the market. All right. The market is already large enough, about $6 trillion or more in the financial market, and everybody is willing to trade to make profit. So you don't give to the market. All right. You have to have a trading plan, be strategic on how you want to approach the market, and that's how you start seeing progress in your trading. All right. The next one is not knowing what market to trade. Now, it's enough to have a trading plan, but you have to know the market to trade part time. Don't trade, don't trade blindly. Avoid choppy markets or ranging markets. So there are three phases of the market. We have the accumulation, manipulation, and distribution. There are times when the markets, you know, we have slow movement, we have manipulation. You could take out some, put people on the wrong side. We have distribution, just like that. You have to be able to know the phases in which the market is trading at for you to be able to approach it. So these are the things you need to know. The market you want to trade, is it accumulating or is it trending or is it consolidating? You have to understand the market phase. That's how you know how to approach. I know some of you newbie trader, you don't just know when the market is favorable to trade. You see anything, you just go in like that. No, no, no. That is not a good trading habit. Find the simplest market direction or pair to follow. For me, I change my pairs almost every week. I observe the best pairs, the best setups. That's the one I put my energy on, right? Euro USD can be buying, GP USD can be buying, but Euro USD can buy more better than GP USD. Yes, it's still a buy signal, but sometimes the pair you trade affects your success, affects your trading result. So know the market and the pair to trade at time. The third mistake you're probably making right now is poor market analysis. Poor market analysis. You play down on fundamental data. This is majorly for Forex trader because I'm talking to both Forex traders binary option traders. All right, it's still trading. Even if you trade stocks, we're all in the trading business. These are the mistakes traders are making, and once you learn to stop them and create a solution around them, you're going to get trading success. So trade pure price action and never rely solely on indicators or bots. Some persons rely on indicators. Yeah, indicator works sometimes, but you don't need to rely solely on them. You have to understand price action. You have to understand how the market delivers price. Not having enough technical edge. If you're trading this market and you don't know how to understand or read the market properly, you're going to struggle. You have to seek for the right knowledge on how to understand the market, and that's why I'm here to do that in the mentorship. So never rely solely on indicators. The best I can recommend is volume indicator. It looks like this. It just tells you the volume of price, or if there are enough transactions going on, or if the market is choppy, if the market is slow, no volatility. That's what the volume indicator tells you. I use it sometimes. Like I said too, don't rely on bots. Trading bots today, they can give you profit, all right, for the first 2 to 3 months. Before you know, the next month they'll blow your account, and that's not consistency. You can't get consistency trading with uh, EA, the expert advisor or bot. I don't know what you call it, or AI. You know, doesn't work like that. Learn market structure, learn candlestick psychology, learn liquidity concept. These are the three major things you need to learn about market structure, about technical analysis, right? And then learn fundamentals. I teach all this to my mentorship to them, but for some of you that you can find your way around YouTube and you browse, you can do more research on them. If you want to if you need more knowledge, you can contact me and I'm going to teach you all that in the mentorship. So movie recommendation. This is about fundamentals. Taking up Payham 1, 2, 3 and Dumb Money is on Netflix. You can watch it. You learn about they shared some insight on some secret about how the market works. Fundamentals really drive this market for forex traders majorly. We know when we started, we just do much of technical analysis. They tell us that technical analysis covers about 70% of your success, but no, that's not true. I think fundamental analysis is what drives price. Learn fundamental data, learn interest rates, CO2 reports, inflation rate, everything you can learn about fundamental analysis. Try as much as possible to pay attention to fundamental analysis. We're currently in the Donald Trump season, and the markets are really volatile. The market has doing crazy things. You have to be able to interpret fundamental data to be able to predict the next market direction. And I do all that too. The fourth one is emotional and revenge trading. Greed puts you on a trade, fear takes you out. Your emotional state is very, very important when you approach the market. You have to keep your emotions by the door before you come into trading. All right. Don't be too emotional about price or emotional about losing money or making money. Please don't allow the losses get to your heart, and don't allow the wins get to your head. That's one of the major quotes about emotional trading. You have to learn to control your emotions as a trader. You really need to regulate your emotions as a trader. Master yourself and your thought process. I know when you want to approach the market, there are sometimes you'll be getting signals of fear or you losing money. The first thing that comes in your mind is, oh, I think I'm going to lose money if I want to trade. Because our brain is a negative assessment machine. We always look out for negative things that are likely going to happen to us. And when you want to start trading, because there are chances of you losing your money, your brain tends to pass signals of fear. All right, it tends to pass signals of fear to you, and you end up not trading very well. This is one of the major struggles traders face, and there are ways to develop your trading psychology. There are studies on that. So fear and greed is the major struggle of a lot of traders. Most traders are fearful in a winning position and are hopeful in a losing position. What that means is that when they are winning, they are scared of, hey, I hope this market doesn't reverse against me. I hope this market don't reverse you. So you're scared when you're in a winning position. And these are majorly for newbie or intermediate traders. For advanced traders like me, I don't struggle with all these things. So when they're in a winning position, when they're in a losing position, they are hopeful. Oh, I hope the market reverse. I hope the market reverse. The losses are going to reduce. You know, they are hoping, praying that, oh, the market goes in their direction. But when they are winning, they are fearful that the market shouldn't reverse against them. It's funny, it's kind of like reverse psychology, but you can tend to control your emotion. When you're in a trade, you just believe your system, you've done your analysis, you put your take profit target and your stop loss, and you allow the trade to run. That's discipline. And discipline is a major habit or you need to practice in your trading. So that's why a lot of people do well on demo accounts and lose on real accounts because of the risks is palatable. When trading on demo, you can see you do crazy things, you flip your accounts, you take big risks, you keep on winning, winning, winning because your brain is functioning very well. There is no epitome of fear. You're not losing any money. But when you go over to real account, you start being too careful. Hey, I don't want to take this trade. Hey, I don't want to lose. I don't, you because of your being too careful, it's going to affect your ability to understand or read the market properly, and you end up losing money on the real account. So that's the struggle of a lot of traders. They win on demo, but they lose on real accounts. So once you can learn to control your emotions, understand yourself, understand your mind, understand how the brain works, you can easily approach the market in a better way. So learn to control losing streak. Take small losses. Cut losses short and fast. Now, there's a saying that if you can't take small losses, you end up taking the mother of all losses. And what's the mother of all losses? You end up blowing your account. So you need to learn to take small losses. Yes, don't shift your stop loss. A lot of traders they do that. When the market is almost hitting their stop loss, they drag the stop loss away. No, I don't do that. For someone like me, if I'm trying to lose maybe $100 or $50 on a trade, if I'm seeing a loss of $47, $48, I'll just close the trade myself. I like cutting my losses short and fast. I don't care if the market is going to like once it's just going against me and it's almost hitting my stop loss, man, I'm out. Or I just allow it to hit my stop loss and I'll be fine. I can't remember when last I adjusted my stop loss because I don't want to take a loss. No, no, no. I like taking the short-term loss and I accept that okay, I'm in the wrong direction. But when I'm going to be in the right direction, the market is going to run immediately from my entry, it's just going to run to profit. So these are the habits that you need to apply. All right. Cut losses short, take small losses, and expect to win. All right. You have to manage your losses and believe it's part of the business. You can't keep on winning, 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 winning. It's never like that. This word is balance. The Chinese call it yin yang, the yin yang theory. So we have night and day, good and bad, win, loss. The word is binary, all right? So two things. It's either you're winning or you're losing. It's either it's yes or a no. It's either it's black or it's white. It's either it's win or you lose. It's either you're happy, you're sad, all right? Night or day, the life is balanced, all right? So you can't even trade the forex market without having losses, all right? You have to win and you have to lose. It's part of it. It's balanced, but you could win more and cut your losses short, and that's how you become profitable. All right. So the trading game is all about probability. You never know the next trade. You never know the one that's going to be a winner or the one that's going to be a loser. You just have to execute your edge. Trading is about execution. Execution, execution. Once you see your setup, you see your model, you take the trade. You don't know if it's going to be a winner, it's going to be a loser. That's just the beautiful part of trading. All right. So it's a random distribution between wins and losses. All right. You never know which trade that will be a winner. So just focus on your next 100 trade. The trade you're struggling right now, in the next 100 trade, it won't matter. Okay. The next 100 trades won't, that's your target. You want to look at your next 100 trade. That's how you know, okay, am I profitable or am I losing money? Okay. But don't struggle on one particular trade. You tend shifting your stop loss. The market keeps on going against you, and you keep on losing money. That's a very bad trading habit. All right. So look at in the long term, my next 100 trades. So even if you lose a trade or you win a trade, it doesn't matter. You're looking at your next 100 trade. So choices made in anger cannot be undone. This is when you try chasing your losses. This is like a dog chasing this bird, and it didn't know that there was an open hill here. And while trying to catch the bird, it would just fall down and die. So the same analogy here. This is you. This is your trading losses. If you tend to chase your losses, they call it revenge trading. You're trying to get back your losses. Get back your losses. or not trying to accept the little loss, you end up blowing your account. And you can see the dog can't survive here. It has to just go one way, which is down, big destruction. And that's not what you want to reach for yourself. So don't try to increase your risks to get back your loss, trying to do crazy martingale or different uh, crazy money management pattern just to recover your losses. Trade carefully, trade gradually, and you come back in a winning streak. So it's part of the business. You can take small losses, and that's why you have to have your trading plan. If you're risking two, three, four, one, if you're risking consistent risks on your account, you never lose more than intended. All right. If you lose 2% on your first trade, the next trade you still risk 2%, you end up making 4 or 6% when you're using 1:2 or 1:3. Right. So that's the beautiful part of this trading business. Okay. The fifth mistake you're probably making right now is lack of trading journal. Have a trading journal of all your trades and setups on a weekly basis. Okay. So as a trader, you have to keep track of your trading progress. You have to keep track of how many trades do you take. You have to observe the kind of setup that are going very well for you. You have to keep track of your trading progress. That's how you tend to scale. For me, I've had a lot of trading journal. I keep on journaling my trades, journaling how many wins I had in a week, how did I enter the trade. All right. Anything that cannot be measured is of no value. You have to be able to measure your trading progress, track your trading progress. That's why you need the trading journal. You write down your psychological experiences, how you felt when you were in your trade, things you would have done better, the mistakes you made. All right. Those are the things that needs to be on the trading journal. So the days you trade, the wins, the losses, the pair, the lessons learned, the mistakes learned, everything, you just keep on journaling them. Your trade entry patterns, how did you enter the trade? Did you use confirmation? What time frame? And the reasons of you entering that trade. You have to keep on tracking your progress. Now, all those are the things that are going to be part of your trading journal. Okay? And that's it. Now, the sixth mistake you're probably making right now is lack of money management. So I think I've touched a little on this. Now, believe in the long term game. The number one rule of trading is to protect your capital. That's the number one rule of trading, is to protect your capital and not to make profit. Okay, so play the long term game. Um, for you to be able to make profits in this business, you can't take away the importance or the power of money management. All right, don't try to scale big so fast. You have to grow gradually. And for you to grow gradually, first of all, you have to protect your capital before you start looking out for profit. So there are different money management patterns, but like I said, if you have consistent risks on the account and you have good risk to reward, that's money management for you. You just keep on following it and you always come back in profit. Wow, I'm currently on the last one. I'm just trying to wrap this up, so I don't want to make the video too long, but I'm making sure I'm hitting all the points. Now, the seventh mistake, it's disrespecting the process. All right. Trading is not gambling. If you gamble, it might work once or twice, but will ultimately fail. Trading is not gambling. All right. Some persons compare trading to gambling. No, real trading is not gambling. We do speculate price, but there are times the odds can be in your favor, but in gambling, the odds are never in your favor. Please, trading is not gambling. Submit to time. Respect the process. Yeah, this is a skill. This is a business you want to do. You have to give it time for you to grow, for you to invest capital, for you to invest time, screen time, and before you start getting good result. Yes, you might get small results at your beginning stage, but for you to start scaling big, you have to give it time. All right, you have to respect the process and allow yourself to grow. Like our big investor Warren Buffett will say, no matter how great a talent is, some things just take time. You can't get a baby in less than 9 months, even if you get 9 women pregnant. So a baby has to grow in the womb for at least 9 months before you can give birth to that baby. So even if you need a baby right now and you just impregnate 9 women, you will still never get a baby. They have to grow for that 9 months. So the same thing in trading. For you to start scaling big, you have to grow. Growing in terms of your trading psychology, how you execute your trade, how you observe the market. The way I analyzed the market 2 years ago is not the same way I analyze the market today. So you keep on evolving. A wise man says you evolve or you die. You keep on evolving, you learn, you upgrade your knowledge, seek out for right information, seek out for new information. One funny thing about this business of trading is that one information can change everything about your life. Just one information someone can share to you can change all your results, can just transform your trading. So you keep on looking out for information in this industry. So trading is about the journey, not the destination. Enjoy the process. A better trader is a better person. A better trader is a better person. And it once you're a profitable trader, you're not an average person again in this world. You're highly at the top 1% of people in this world. And I love that. I want to be different. All right. I don't want to do what others are doing. Some persons are just selling things, buying and selling, doing those things are just generic. They're basic. I like being a trader. It keeps me on my best. All right. Keeps me on my best performance because I always want to look at what the market is doing. I'm always updated in the events going on around the world. I always want to understand my mind, understand my psychology. I'm always aware about what I'm thinking, how I react to losses, how I react to wins. It's just a beautiful journey, and I tell you for free, trading is the best thing that can ever happen to you. So make the rest of your life the best of your life by trading very well. And by bringing all these habits I've explained to you, these are the solutions I've given you. It's going to make the rest of your life the best of your life. So, believing that you can is way more profitable than believing that you can't. Yes, it's possible. You can actually be a profitable trader once you review these mistakes I've given you. If you're making them, you stop and you apply the solutions and you start getting results. All right. So, but the genesis of trading mistakes is relying solely on YouTube videos. Like I said, you can't be profitable just watching YouTube free videos. There are some premium information that you can't find on YouTube. All right. I'm not here to sell you anything, but I'm just telling you, you can't get profitable relying solely on YouTube videos. You need to have a mentor. Not having a mentor, it's another mistake you're making in your trading. That's where my profitable mentorship program comes in. I'm taking students both in binary and both in Forex. If you're still struggling to be a profitable trader, you can contact me. My details are below. I'm going to teach you, take you right from where you are to where you ought to be. Right coaching, right mindset, all the informations I've gathered in my 5+ years of trading this financial market, both in binary option, in Forex, and all that. I could give you all of them, and it's going to cut your whole years of being unprofitable, and in less than a few months you start seeing results in your trading. All right, so I'll see you all at the top because the bottom is too crowded, but don't look down on anybody except you're willing to bring them up. All right, so do have to hit the subscribe button, drop a comment if you love this video, tell me the best points that you enjoyed and how you're going to impute or apply them in your trading career. And without any further ado, I wish you all good luck with trading. Peace. Bye for now.